up, everybody?
Why?
What?
It's so blurry.
It's just your screen.
Are you
Is it
sure?
your camera? I don't know. Let's try and clean your camera. Let's see. Did that help?
We're so blurry. We have
Let me
kids
turn
yelling
on-
in the background. We're going to check our lighting. What's up, everybody? We're live. Hello.
How's that?
Better. Hello. Hi. That's better. Hello. We have the Niesman team, including Trey Niesman, here to say hello and then get out of the picture. What are you doing?
Stick your finger up his nose?
No. Ew.
It looked like it on the camera.
Nope. Hi, everybody. What is up? It is Tuesday at 4 p.m. and we are nothing if not punctual, are we?
Right on time, like in the nick of like 4 o'clock and 57 seconds.
Woohoo! We made it on time. It is Tuesday at 4 p.m. and we are here to talk about it, aren't we?
We are.
What are we talking about today?
We're talking about credit.
Yay. Yay.
Yay.
Ah!
I mean,
I feel like that's a
credit's
boring
important.
topic. Yes, it's as important as filing your taxes with the IRS every year. I don't know that it's very much fun.
So
I would much rather talk about decorating a house to make it worth more money, but not everything can be that exciting.
I have a dog.
You got the
staring
entire
at me.
Niesman team.
Come on.
You need somebody
You coming?
to organize your board games
My
over
board
here.
games?
Yeah, hi everybody. We are live. Don't forget you are welcome
There he
to
is.
say hello to us and leave notes in the comments. As always on Talk About It Tuesday, I am the voice of all of you lovely folks watching on Facebook, or if you're watching us on YouTube, then forget about this because you can't ask us then, but you
can
have
ask
the
us
fortune.
questions on YouTube.
Yeah, I guess that's
We
true.
just can't talk about them live because we won't see them because
No,
you
we
won't
can't.
see this till afterwards.
No, indeed. And so welcome. We are the Niesman team with Keller Williams Realty in Fort Myers and the islands. What are the islands?
Dude, it's
Santa,
all of Southwest
Captiva.
Florida. Look, we just did a deal in Tampa.
We did.
Hi, Gus.
We're all over the place.
Apparently
The
he
Niesman
wants a
team
hug.
will work anywhere from, we really try and stay in what, Sarasota, Bradenton,
Down
south to Naples, and then like anywhere from the beach to where Florida turns into alligator swampland and everywhere up and down. So let us know if you need anything. We have been 10 years in full-time Southwest Florida real estate, helped over 500 families buy or sell a home. And we get together.
And commercial buildings?
Oh, we do. Yeah.
We do
commercial
too.
Residential,
Investments.
investment strategies, all of that. And we're moving into construction.
Yep.
Yay. Yay. So all the things. This is our mascot, Gus Fring. If anyone watches Breaking Bad, let me know in the comments. He is just as grumpy and nefarious as Gus Fring was in Breaking Bad. And that's how he got his name. Our kids think he's named after Gus the Mouse in Cinderella, but he is not indeed, because he is not nearly so adorable and sweet. So what are we talking about today? We said we're talking about credit. We have 8 tips to improve your credit in hopes of getting the best possible mortgage.
Best interest rates possible.
Best interest rate.
I mean, it's not just mortgages that'll help you get the best interest rates on car loans, credit cards, anything that you need credit for, this will help.
Now, we have like a bunch of like
we have to preface,
asterisks. Yeah.
We're not credit repair people. We're not mortgage lenders.
Nope.
This is based on
we're not offering legal advice. This is all from our experience.
Based on our 20 plus years each of experience dealing with credit.
Yep.
From the real estate business and prior to that, the auto industry.
Yep. For those who don't know, Jerry and I both worked for Nissan and a couple other car manufacturers in dealerships and have a history of working in finance and helping people achieve all of their financial dreams. And so we spent a lot of time reviewing credit files and seeing what helps people get a better credit score. We have advised or assisted clients both in the auto industry and now for the last 10 years in real estate say, hey, I have a dream of home ownership. How do I get from point A to point B? And these are the best tips that we've come up with to help you get the best rate possible. And for those that are just joining us, once again, as we plow forth, we have these 8 tips. I'm going to type them and document them so you can read them if you follow us later. And or you can type messages back to me or ask for questions or clarifications. We're happy to slow down. I am your voice, and so Jerry's the one who really knows most of this stuff because that's his cup of tea. This is what he does, is he handles all the business side of things. And so we are going to get started. Anything else? Do we have any like business, anything to clarify, anything to clear up?
No, I think that's it.
Yeah, happy November, everybody. I hope did everybody survive the tropical storm?
We did.
Etta?
We're still here.
Okay, I have a question real quick for those here in Southwest Florida. Is it really Tropical Storm Etta, or was it like ETA, like it's estimated to arrive as a tropical storm, and like somebody like accidentally called it that?
I think that's a Greek alphanumeric.
Oh.
Like, because we were into the Greek letters.
Oh.
I think that's a Greek alphabet.
Interesting. Let me know if you know
word.
how you got the we got the name.
And I think we got all the way through like this crazy storm year. We got
2020.
all the way through.
Yay.
The regular alphabet and all the way to the E's on the Greek alphabet.
Wow. This fire is a nice representation.
And there's another one
of the dumpster fire that is this year. Our I hope everybody survived. Our ceiling collapsed. Cheers. Our roof caved in
the kitchen.
Woohoo! So yay homeownership. So if you are like us and want to have all the joys of homeownership, let's talk about how we can get your credit to the best possible situation for you to get the best rate possible on anything you're financing. So tip number 1 we're going to move into, and that's know where you stand. And I think that this is a really important one that I hear you talk to a lot of people about, especially
all the time.
Especially because a lot of people say, I'm not able to buy a house right now because my credit's not there. And
or people saying that they're not ready to buy a house yet, so they haven't talked to a lender yet, but they're looking at houses.
But why would somebody talk to a lender if they think that their credit can't qualify them?
No,
why is it
it's
so
not
important?
that they don't know whether their credit can qualify them or not. It's we're not ready to buy a house yet. We're thinking 6 to 12 months from now we want to buy, so we're starting to look online and see what's out there and get some ideas for what we want.
Right.
Well, if you don't know where you're at, find out before you even start looking for a house. Number 1, it doesn't cost you anything for a mortgage application. Correct. To look and see what your credit score is. Now, you can go online to places like Credit Karma and stuff like that. You can get your credit report and scores for free. That'll give you a ballpark idea of where your scores are. But the scores that mortgage companies see are very different from the scores that you will see on there.
I have a question.
What?
So I think that a lot of people don't know where they stand because good intentioned people have suggested never get your credit run unless you have to because it hurts your credit score. So talk to me a little bit about that.
So that's where those other, like, you can go to the credit reporting agencies. Go to Equifax, go to Experian, go to
TransUnion. There's 3 of them, so let's break it down.
Equifax, Experian, and TransUnion.
Is there one specific that's more mortgage heavy or real estate? Okay.
No, they use all 3.
Okay, cool.
Mortgage companies use all 3. The banks for car loans look at all 3 typically. Cool. So they're going to look at all 3. The way the mortgage companies look at it is they take all 3 scores and whichever one ends up in the middle. So it doesn't matter what your scores are. If it's a 650, a 623, and a 602, it doesn't matter which credit reporting agency gives which number. That 623 is the number they use. It's whichever number is in the middle is the number they go off of.
I didn't know that.
Well, you do now.
Yeah. So, so you need to know where you stand before you start shopping. I think that the important thing is, as a home buyer, when you're ready to buy a house, there will be something for you in your price range. Probably. I mean, there's a really good chance.
There will be something for you in your price range. It may or may not be what you want.
Right.
But it doesn't matter if what you want is available if you don't qualify.
It's like cart before the horse, right?
Correct.
It's shopping should happen. You need to know where you stand.
Correct.
With your credit.
Yes.
Before you go shopping, because it will point you in the right direction.
So, and there's a couple things too that you got to take into consideration. if you don't ever look at your credit report, you have no idea what's on there.
Yes.
There could be things that are old on there. There could be fraudulent information that's on there. Maybe somebody stole your identity. If that happened and you have no idea, it could take you a year or more to get that cleared up. So if you're thinking, oh, well, I don't need to worry about that until
I find the dream home.
Until I find the home. Well, guess what? You find the dream home and now you got to wait 2 years and now that dream home is no longer available. Well, then what?
I always liken it to, like, look, I get it. Adulting is hard. Sometimes you don't want to look at your bank account when you know you've been swiping your card a lot. You don't want to step on a scale the day after New Year's when you've enjoyed sweets and desserts for 3 months straight. Sometimes it's just better, though, to rip out the Band-Aid and get it over with and look at it, because then at least you know where you stand. At least you have a baseline of this is the real true info. And trust me, after, like Jerry said, decades of looking at credit and helping people with credit and moving them towards their goals in homeownership and stuff like that, a lot of times you're not as bad off as you thought you are. A lot of times it's not the fear of looking and knowing what those numbers look like and what's on there is worse than the actual scenario. So just go
then once you know where it is, then you can put together a plan to get where you want to go. But if you don't know where you are, then how can you? It's like if you're already lost, you can't get where you're going because you have no idea how to get there. You got to figure out where you are first. And then figure out where you want to go, and then you can find the roadmap to get there.
So where do you suggest somebody goes to know where they're at, know where they stand in the situation? Is it to you as a realtor? Is it to Credit Karma to check out your scores? Is it to a mortgage person? Where should somebody go?
So here's the thing. Like I said, the credit bureaus, the reports, they all score things differently.
Okay.
And they have your score is going to show up different. Like if I pull up my score on Credit Karma right now, it's going to be totally different from the score that I see. Like if I pull up Credit Karma now and I go to a car dealership and I sit down at the car dealership and have them run my credit, the scores they see will be different than what Credit Karma sees.
The scores, but what about the reporting? What about the stuff on the report?
Same.
That's so crazy to me.
Because things are weighted differently based on what you're applying for.
Ah, I see.
So if you're applying for a car loan, there's going to be a different weighting on what's more important and what affects your score more for the car loan. Same thing with the mortgage. There's a different weighting. So like you could sit at a car dealership and have your credit report pulled. And you could call a mortgage company and have your credit report pulled, and they will show different numbers on the same bureaus, same day. It's just because of the way they weight. So places like Credit Karma, the credit bureau websites and things like that are going to give you a good starting point. If you're in the 700s on those reporting websites, chances are you're going to be in the mid to high 6s or up into the high 7s. Depending on what caused your score to be there in the first place with a car dealership, with a mortgage company. So it's going to be in the ballpark. Figure between 30 and 50 points difference.
You think it's worth it? You think it's worth it to take that ding everybody talks about, like it's going to ding your credit?
If you go to the credit bureaus, it directly to them, it doesn't ding your credit. It doesn't put an inquiry on there. So you can start there to get a good idea.
Cool.
If you're in a questionable range, where like if you're somewhere in that, like if you show up there somewhere between like a 650 and a 550, then you probably want to talk to a mortgage company because then they can see the actual mortgage scores, because it might be higher with them or it might be lower with them. So if you see that, then you can start, you talk to them. And like I said, most of them don't charge you anything to run it. The point is, when you talk to them, they want you to go with them. Now, obviously, they understand, a lot of them, that you're going to shop interest rates and compare and things like that when you really get close. So don't go to 5 different ones right now when you're thinking you're going to buy 6 months or a year down the road. Just go to one. Because each mortgage company is going to see the same score. Or pretty close to it, because that first one will take a couple points off But you don't need to go and shop around to a bunch of
places.
places. You just need one so that you know what you're working with.
So number one is know where you're at, and then number two is to truly understand what those numbers are and how your score works. So let's break it down. Right. I know you've already tossed numbers out there like, oh, you're between 550 and 650. What is the range? How does it?
So the credit bureaus themselves.
There's three of them. You already said there's three. Equifax,
TransUnion, and Experian.
Okay, and each of them have a different.
Well, they're pretty close.
Range. Okay.
Yeah, they do. There's slight variances, but they're pretty close. So they all pretty much range from like between 300 and 850. I think one of them's 280. But between 300 and 850, 300 is the lowest score you can get, and you really have to work hard to try and get that low of a score.
Sure, that takes effort.
Like you have to put effort into having a score that low.
That many unpaid creditors.
Yes.
It's almost difficult to get into that number because at some point you stop qualifying for credit.
People stop giving you loans.
Right.
So, and then the very high end is an 850.
Okay.
So that's like the highest score you can get. And typically to qualify for a mortgage, some lenders, now there are some variances, some will go lower, some have some different programs and things like that, but typically they want to see above a 620. There are some lenders that will come in the 580 range. I've seen a couple 550 before.
In the 550s?
I think 550 or 560 I think is the lowest that I've seen accepted.
You can get a cosigner, or is it a guarantor with a home? You have like mom or dad?
But if your score is below that, you typically cannot
be on the loan.
Right.
Okay.
So then they would have to buy the house and you would have to rent it from them, basically, is how that would work. They can't.
So.
They're not allowed to buy a house for you either.
Right.
Like they can't. Not saying people don't do it, but you're not supposed to. That would be mortgage fraud if you don't.
Yes, you can't buy a house for somebody, right?
Right. But you can buy a house to rent it to somebody.
Sure.
So like, if you want to buy it for your kids, you can buy your kids a house and rent it to them.
So number three is going to be, now that you kind of know how it works, now that you kind of know where your personal credit stands in terms of bringing it to the next level to get the best interest rate possible on whatever you're trying to finance, let's start talking about tip 3, which is fix any errors that are showing. So like, what are some, for instances, that you've seen on people's credit that are true errors?
Don't mind the ghost passing by.
I know. Trey's going to take over our company one day, just so everybody knows. He's the future face of the Niesman team.
He's practicing.
He is.
Being on camera.
He's trying to.
All right. So fixing errors.
Like, what kind of errors have you seen on bureaus that need to be adjusted?
I mean, I've seen everything from people not knowing that they had, so that someone had stolen their identity and they had hundreds of thousands of dollars worth of debt that they didn't know that they had.
Right. But you can get it fixed. Right? Like, you can dispute these things. You can get this stuff fixed. So we're going to go.
So you can get all of that.
We're going to go into that with number 4. But that kind of error, I know that you have on your credit report errors that you run into all the time. What is that?
Not anymore.
Now that you got it all fixed.
So this is coming from personal experience, because when I went to go buy my first house, I found a house that I loved after looking at probably 100 houses, and went to go apply for the mortgage, and they said, "Oh, wow, you've got amazing credit. Your credit score is in the 800s." Well, I was 20 years old. You can't, I don't know any 20-year-old that has a credit score in the 800s, because you don't have credit long enough to get that score yet. And I'm like, "Oh, okay, cool." Like, I didn't know any different. And so then they started looking at it, and they compared my debts and the income that I was making, and they said, "Oh, wait a minute, you can't buy a house. You have too much debt." And I'm like, "What are you talking about? I have a car loan, and that's it, and one credit card." And they said, no, you have 4 car loans, and you have a mortgage, and you have a multitude of credit cards. And I'm like, what are you talking about? Because I am a junior.
He shares a name with somebody, and so it was like
So
all mashed up.
Even though our social security numbers were different and our date of births were different, because the name was the same, somehow our credit, me and my dad's credit, got merged.
Yeah.
And so on my credit report, and so I called him and asked him, and he said, I don't know. So we had the mortgage company pull his credit too, and found out he had the same situation. So he was showing 4 car loans. So I had one and he had one, but they had both of them on each of our credit twice. So it showed me as having 4 and him as having 4.
Ooh, that's not good.
So we had to go and dispute all that and get it fixed. And luckily, the seller was willing to wait on me being able to get that cleared up. So yeah, I've experienced that.
Errors,
so
have
looking
those
for
cleared
errors,
up.
you can dispute them, you can get them removed. You
So
can have all
number
that
4
stuff
is
done.
to start eliminating disputing accounts. So you need to
No, this is different. So fixing errors may mean disputing things.
Okay.
Eliminating disputed accounts is separate, because you cannot get a mortgage if you have any accounts disputed on your credit. So a lot of people will dispute, and this is what some credit repair companies do. Not all of them. There are some very good, legit ones out there.
Right.
But there are a lot of people that claim to do credit repair that all they do is dispute accounts.
But they don't eliminate them?
Even good accounts. Because what happens when you dispute an account, you send a request to the credit bureau to dispute it. The credit bureau then sends a request saying that this account has been disputed to the actual creditor. So like, you've got a credit card with Capital One, let's say, and you call you say, you know what, I don't have a Capital One credit card, but it shows up on your credit report. So now you go to the credit bureau and say, I don't have a Capital One account. I don't know why this is on my credit. They send a request to Capital One saying, please verify that this is a valid account, because the person whose credit it shows up on says it's not valid. Capital One has a certain time frame to respond to that request. If they don't respond in that time frame, it automatically gets removed. So what a lot of so-called credit repair people will do is they will just dispute everything on your credit report in hopes that some of the negative stuff falls off because they don't respond quick enough.
Right.
It doesn't work most of the time.
Okay.
But it temporarily, once it's been disputed, it temporarily inflates your credit score as if that account doesn't exist.
Oh.
So you could have a 550 credit score, dispute 3 negative items on your credit bureau, and now your score is a 650. While they're disputed.
Right.
But as soon as that creditor responds and says, no, this is valid, it goes back on and your score goes back to a 550.
Yeah, that's not good.
So in order to combat fake credit score adjustments, temporary score adjustments like that, most mortgage companies will not allow you to get a mortgage with an active dispute on your credit bureau. So if you're going to dispute a charge that's fraudulent, that's not supposed to be on your credit report, that's why you need time, because sometimes it takes time to get that removed. Sometimes they'll come back and say, no, it's valid, and then you have to provide additional documentation. You got to go back and forth a bunch of times. So it can take 3, 4, 5, 6 months if it's legit to get that removed. That's why identity theft is such a big deal. It's so hard to get that stuff taken off once it's on there. So you have to be able to provide documentation that says that these things are not really my things. So yeah, eliminating disputed accounts, you have to get the actual disputes have to be gone from your credit report, and those items have to be removed, or they're going to count negative on you. You just throw a pen grenade at him.
That hit me directly in the cheek.
5.
That hurts.
Number 5, pay down your debts. So let's talk about, obviously you want to not owe a bunch of people a bunch of money. You talked a little bit about having too heavy of a debt. Talk about a little bit about debt to income and how that impacts your credit.
Sure. So most of the lenders typically have some sort of threshold of the amount of debt, the amount of monthly payments you have going out in relation to the income that you have coming in. And you can't have a higher percentage than whatever that threshold is.
Sure.
So it may be 35%, it may be 40%, it may be 50 or 55%, depending on the loan program and the lender.
And I think that I've heard our mortgage people advise our clients, pay down this specific thing,
Yes.
this amount,
Yes.
by this date, and you will be fine. So your mortgage person will advise you as to what to pay down, when, in what order, and
Right. And that's why it's important to get a lender involved early.
right.
Even if you're not ready to buy for the next, like I said, 6 to 12 months,
Right.
you can get a lender involved now.
Sure.
And then they can give you advice on if you pay off this specific account, and a lot of them even have access to programs through the credit reporting agencies where they can see exactly how many points you will add to your score by paying things down.
That's cool.
Or by, like, they'll tell you if you pay this, like you've got a credit card of $2,000. If you pay it down to $750, it'll boost your score by 42 points.
That's cool.
So they can tell you those things and really help you figure that stuff out. But paying down your debts, so debt to income ratio is one of the main things that they look at in qualifying for a loan. So if you make $2,000 a month in income, they're not going to allow you to have a $2,000 a month mortgage payment.
Sure.
Because you've got to be able to pay utilities, you've got to be able to pay for food, for car insurance, for gas, for all those things. So they're not going to allow that.
Amazon.
Yep. So they're going to have a somewhere in between a percentage of your income that they will allow for that mortgage payment and for your total outgoing payments.
Sure. Like your Amazon bill. Every single month.
You shouldn't have an Amazon bill. You pay Amazon as you go, unless you go get an Amazon credit card, and then you've got an Amazon bill to pay.
Yes. So anyway, pay bill.
So
I feel like this goes without saying.
Yeah. So paying your debts down, of course, that's going to be beneficial, but get us involved. Get your realtor, get your mortgage company involved so that they can help guide you on what is the best accounts to pay down, because some accounts are better than others in terms of paying things down or paying them off. It'll help you more.
So our this is number 6 tip, but I feel like this is a great number 1 tip. Even if you're not in the market in the next 6 months, 12 months, 36 months, always try and pay your bills on time.
That you would think that would be common sense, yes.
I would say what did we always advise? House and car, always on time, no matter what. Like those are the 2 staples. How do those impact your credit more than like, oops, we're gonna make a late credit card payment, or oops, we're gonna make a late student loan payment? Does it weigh more heavily in the scoring system to do
that? I don't know, but like if you get in a car accident and your car is totaled and you need to buy a new car, if you've paid your car loans on time, you can get another car loan typically.
Sure.
Even if you haven't paid your credit cards on time.
Right.
What are you doing?
He's looking for his phone.
Oh.
I knew exactly what he was doing. No, I'll help you find it, dude.
But just wait a minute. We're almost done. Come on.
Yay, working for home. Who else is doing it? Raise your hand.
So
I'll help you find it, dude. Just give us a minute. We're talking about how important it is to pay your bills on time.
So if you've paid your car payment and you've paid your mortgage on time, chances are you can get another car loan. You may not be able to get a credit card, but you can get a car loan.
Right.
If you don't pay your car loan, but you paid your credit cards, there's a good possibility another auto lender won't give you a car loan.
Right. And if your car gets repossessed, then you can't go to work. You can't make the money to pay for your credit card bills or anything.
Correct.
That's kind of the staple behind it. You need somewhere to live and a way to get to your job to make money. So pay your bills on time, prioritize those heavily.
Yes.
That will greatly help your credit situation.
Yes.
All right, number 7, use credit wisely. And I have here 3 golden rules for maximizing your score. And that is what we just talked about. So pay all of your bills on time every single time. And then number 2 is keep balances on credit cards low. And number 3 is apply for credit only when you need it. So I don't know if you have anything to add to those. I feel like it's kind of common sense.
Well, we talked about pay bills on time every time already. The second one was keep your credit card balances low. That one is important because when you carry a balance close to your credit limit, it negatively impacts your score. So some people pay their credit cards off every single month. That's great. It actually helps your credit score the way they've got the credit scoring set up now. It used to be that if you paid your credit cards off every single month, you had great credit. Now they like to see that you actually carry a small balance. I think they work in collusion with credit card companies for that. But it's actually good for your credit. It will help your credit if you carry small balances. But the goal is to keep it under like 25 to 30% of your available credit. So if you have $1,000 credit limit, you should never have a balance over $250 to $300 a month.
Well, and I don't know if you know this or not. You say that they may be in collusion. As somebody who pays all the household bills in our home, I manage all of our credit cards and utility payments and everything like that, our bank balances. I think you pretty much just know if you swipe a card that we own, there's going to be money on there. And no, we meet once weekly and we review all of the household budget. But we pay our credit card. So we put our household expenses on our credit card to get miles or points to maximize the money back that we get for spending money on things that we are going to pay anyway. And we are able to pay our credit card, our entire bill. But when you have pending payments, it just goes on to the next cycle. But you're not, because it's pending in the time that you make your on-time payment, we never pay interest. We never, ever pay interest.
Right, because we pay it off in full every month. Our credit score would be better if we actually carried a balance over and paid interest.
No, but I'm saying I'm pretty confident it shows like $200-$300. No. Okay.
Nope. Nope. When you pay it off in full every month.
Thank goodness you do what you do.
When you pay it off in full every month, so we would actually have we would have a better credit score if we carried a balance of $20.
That's garbage.
Yep.
I don't like that at all.
So that's we would pay interest, and we don't like paying interest, so we choose not to do that. And I'll sacrifice a couple points on my credit score to not pay interest.
So, and then apply for credit only when you need it. We talked a little bit about not running it all the time.
Yeah, so you always want to keep an eye on what your credit is. So that's why the credit bureaus allow you to get your score for free from them, typically once a year.
Yeah.
So you can go to Equifax's website, you can go to Experian's website, and you can go to TransUnion's website, and you can get your credit report and your score for free once every year, typically. And at least you used to be able to. I don't know. I mean, I get mine on
Credit Karma.
No, on Mint.
Oh, yeah.
So
yeah, there's plenty of accounts.
There's lots of ways to do it, but I get it every month.
Cool.
But I pay like $10 a month for
Does it ding your credit?
I think it's part of our QuickBooks
Does it pull
thing.
your credit?
No.
Okay.
No, it doesn't. It doesn't affect your score doing that.
Okay.
It would only
Cool.
affect your score if you went to like a car dealership or a
Sure.
mortgage company or a credit card company or something
Sure.
like that. Like actually applying for a loan will ding your score, but if you go to their websites, then it doesn't. So that's it for that, I think. And then number
Our last
8,
tip.
don't close out
accounts.
accounts. So it used to be beneficial to close out old accounts that you didn't use anymore, and a lot of creditors will close them automatically if you don't use them for a long period of time. It used to be beneficial. It would actually help your score because you didn't have the ability to borrow so much money. If you had, like, let's say you had 6 credit cards that each had a $10,000 credit limit and you never use any of them, it used to be beneficial to close some of those accounts out because then you didn't have $60,000 worth of
Open.
the ability to go out and spend. Now they've changed it because length of time that you have an account affects your score.
Mm-hmm.
So if your credit accounts are only a year or 2 years old, you're going to have a lower score. If you've got accounts that you've had for 20, 30, 40 years.
So they think you're just going out and racking up a whole bunch of new debt? Is that why?
It's just the showing that you can manage credit over a long period of time.
So, like, I know that we, like I said, I manage our household bills, and we use a credit card that gives us the best maximum rewards as travelers because we like to travel. But what that means is when we switched to that, we had, like, our credit union has a credit card. You told me don't. I said, should I just close it out because we're not using it? And you said, no, just leave. I have one like $15 revolving. It's like our kids' PlayStation account that every month $15 goes on and I just pay it off. So it stays open, right? Yep. Is that the right thing to be doing?
Yeah, you've got to use it every once in a while because otherwise, like I said, the creditor themselves will just close it because there's no activity and there's no reason to manage an account that nobody uses. So you've got to use it every once in a while.
And just pay it off in full,
yep.
And then but don't close it.
Yeah, don't close it because, so like, I can tell you one of the things on my credit that when I get my updated score every month is length of time is a negative. Because I think the average length of time that accounts are open on my credit is like 2 years right now.
Right.
Well, part of that is like car loans. We lease our cars.
Right.
So every 3 years I get a new car.
Sure.
So my car loan accounts are never longer than 3 years.
And so that like negatively impacts.
Yep. And like we refinanced our house 2 years ago.
You would think it's better than like a 96-month car loan.
So, we refinanced our house like 2 years ago and we're in the middle of doing it again because when we did it, interest rates had, like, they were significantly lower than when we bought the house, but they'd spiked back up and now they're crazy low. So, so that's gonna hurt again. But
it's what it is.
Little things like that. But that is the thing that affects your credit score the least.
Oh, okay.
So length of time on accounts is the least impactful.
What do you think is the most? Paying bills on time?
Yeah, for sure.
And then what?
Not
having.
Well, making sure that it's accurate.
Okay.
Making sure that everything's accurate. But the most impactful on your actual score is paying bills on time.
Okay. That's what it's a reflection of, right?
I mean,
at the end of the day, that's what a FICO score is.
You don't pay something, you go into collections, your score takes a massive hit.
Sure. What about like medical bills or student loan payments versus?
Kills your score.
Really?
So.
That's too bad.
Student medical debt, stuff like that, anything in collections on those, like a medical debt especially, won't necessarily disqualify you from getting a mortgage, but it will absolutely
kill your score.
So you could pay everything else perfectly and have 30 years worth of credit history, and if you don't have that medical debt, you might have an 800 credit score. You have that medical debt, you're probably in the low 6s if you're in collections for medical payments.
Crazy.
There are ways to keep it from showing up on your credit, like pay them, even if it's a little bit.
Yes. Yeah. And I think that even though, again, let's preface this statement by saying, like, I'm not in insurance, you can negotiate medical payments and student loan payments and IRS payments and all of those. And if you're paying a little bit,
handle it before it goes to collections, because once it goes to collections, you're in trouble. But if you can deal with it, even if it means like, hey, look, all I can pay you is $20 a month. If you can get them to accept it, then they don't put it on your credit. You just got to have that conversation with them before it goes to collections.
And even though we say, like, handle it before it gets to that point so it doesn't get really bad, even if it's really bad, it can always be repaired.
Right.
We have stories of people who have gone from 450
we got one under contract right now.
That just, it happens. We can work with you. Don't ever feel like it's completely over.
Yeah, we've got a family right now that we've been working with, what, 2.5 years probably? And that we've been working with, helping them work through their credit situations, get everything fixed and going.
And that's some of our favorite clients. So make sure you work with somebody who's patient and understanding, who really understands the situation and leads you in the right direction. Not everybody has that kind of experience. And so make sure either your realtor or your mortgage person is really experienced with credit repair.
And then do what they tell you to do. Yeah. And if you can't do it, then say, hey, look,
tell them you can't do that.
This isn't going to work for me. We need to make an adjustment to it, because I've had clients that, with the best of intentions, we gave them advice, myself and the lender we were working with.
Not me, I give no advice. I give advice on bacon.
We told them exactly, here's the steps you need to take, and then somebody else said, no, do this instead, and they did it, and it set them back 6 months.
Yep.
Because of one simple thing. And so please, if you're not sure, ask. Even if you think you might be able to do something, and so you agree to it, and then you find out 2 weeks later, hey, you know what? I can't pay this much off right away. Okay, no problem. Let's talk so that we can adjust the game plan.
Yep.
It can all be worked through. We just have to
step on the scale.
Yep, step on the scale and then put together a plan, and we can set a realistic timeline based on your income and where you're at with everything. Put it together. And then if it takes 6 months, great. If it takes 9 months, great. If it takes 2 years, no problem.
Yeah.
It's just a matter of, it's going to take time to do. And that's why it's best to start early, looking at it to figure out where you're at, so that then we can put together a realistic game plan to get you where you want to go.
Yeah. That's it, dude.
That's it. That's what we got.
Tell us, how can people, I'm going to type it all in, how can people get a hold of you if they need you?
So you can call me, 239-201-9583. Call, text at that number. You can email me, jerryniesman@gmail.com. You can send me a message here on Facebook through the Facebook Messenger, or drop a comment in the video thread. You can find us on YouTube at the Niesman team, right?
Yes.
Instagram. I mean, you can find us pretty much anywhere.
Anywhere, in any way, shape, or form. I'm typing it all here. If you need anything, let us know. What are we talking about next week, my friend?
What did we say? I don't remember. We were talking about that this morning. What was it? Oh, our website, realpeople-realestate.com.
Yeah, did you not get that out?
I didn't say that one.
Yes, there it is. It's even a little link to it. I don't remember what we're talking about next week.
What are we saying?
We have it figured out.
I hope you wrote it down.
I'm sure I did.
We had an idea this morning.
I'm not great at a lot of things, but I'm good at writing things down.
We had an idea this morning. We forgot what it is today.
Tune in, man. Let's talk about it. It has been a crazy day. Our roof fell in. So
last night.
Not good.
So we're gonna go. Had to fill the hole.
Yeah.
This morning. That was fun.
Yay! And so I hope you all survived the tropical storm Etta. I think they changed it.
They did not change it.
They changed
They
it.
don't change the
You
names.
want to bet?
They don't change the names.
How much you want to bet?
No, that's a new storm.
No, it's different.
No.
Tropical Storm Adam. It's been fun talking to you. We should let people go at.
But you're gonna try to prove yourself right, but you're wrong.
Anyway, we're just gonna move on with our day, and
It's Etta.
let us know how we can help you. Thank you guys so much for joining us to talk about it. It is Tuesday. Go eat some tacos on our behalf. We're gonna go eat tacos too, and hope you guys
Good,
have a
'cause
great
I'm
day.
hungry.
I know, right?
Yep. Bye,
everybody. Do it.
I'm not doing it. That's your thing. You do the thing. I'll click the button for you while you do the thing.